Welcome everyone. One more week, one more wrap. I have with me Mr. Pankaj Pandey, and this has been an exciting week. Multiple reasons. After quite a while, I think we saw two consecutive green candles on a daily time frame, which was heartening to see. But then again, after that, we saw some downslide. Beyond that, of course, much awaited US elections have been over. So there's a lot to unravel in this market wrap. Let's begin with the overall market outlook, sir. How does it look right now?
So hi, good evening, Vishu. Yes, U.S. markets, one big anxiety is over. So U.S. markets have seen a lifetime high closing. Markets have gained 4% there, and I think good part for us is that Nifty closed on a sort of a flat note. Uh, what is done well is IT and PSU banks. While when you look at some of the FMCG and energy stocks have extended their losses, mid caps were slightly better with a gain of 1%. Now, our sense on the Nifty is that Nifty is not crossing 24,500 kind of a levels, and it's also not breaking the support of 23,800 kind of a levels. So somewhere down the line, Nifty is going to oscillate in this particular range. We have closed at 24,100 around. So unless this 24,500 level does not get taken out, 24,900 is it would be a challenge, and similarly downside also. But historically, what we have seen is that since COVID, markets have this habit of correcting 8 to 10 odd percent, and we are already down about 9 odd percent. So, which is why I feel that the downside is limited in the market, and incremental weakness should be used as an opportunity to buy. And I think a good part is that globally, one of the big anxieties is over with the US election sort of already over. And I think what it does to Nifty is that the outlook on IT gets better because IT is really 17%, or both IT and banks are about 50%, but IT is about 13, 14 odd percent of the overall Nifty. So one big component of Nifty at least will have some clarity in terms of directionally where things are going. So that way, yes, markets are expected to consolidate in a broader range, but weakness should be used to as an opportunity to buy. We don't see too much incremental weakness going forward.
Sounds great, sir. Now, I think let's get to the most awaited section, which is what will be the impact of the Trump presidency on Indian markets?
I think before we go to Indian markets, I think for US markets is definitely a big positive because see, understand this. Trump was one of the was vouching for cutting the corporate tax rate from say 21% to 15%. So obviously that will entail some amount of benefits to the corporates, not the big ones, because the big corporates are listed in low tax destinations. So, which is why on the election day we have seen their Russell index doing phenomenally well, up about 5 odd percent compared to Dow or other indices. So yes, corporates are going to be a big beneficiary there. And one way to sort of cover those benefit is because Trump is quite in favor of raising tariffs. So tariff is going to sort of come and haunt the world. But relatively for us, I think tariff is going to be lower. But in general, tariffs are going to go up, and which again is giving a sort of a sense of a fear that in US fiscal deficit could be higher, and also the inflation could be higher. But the key positive takeaway is that the US market becomes very attractive given the fact that corporate tax cut are about to happen or would happen on if the Trump walks the talk. And so that way, I think US market performance is going to be relatively better than a lot of other global markets. So from that perspective, it is definitely positive for the US markets. Now, when you sort of look at implications for us, so there are multiple implications. One, let's take piece by piece. So, for example, I think one big implication is the geopolitical. So, typically, Trump is really not in favor of war. And last 2 3 years, we have seen elevated geopolitical issues, be it in the Gulf region, be it in the Ukraine-Russia issue, or even in our neighborhood, which is Bangladesh. So our sense is that a lot of these problems, probably or geopolitical issues, will not get escalated, and so over a period of time they might get self-addressed. So this is definitely positive because a country like India can channelize a lot more positive energy towards development rather than sort of fighting multiple battles. The other is when you look at from the segments like say currency. Now, currency, if US is going to do well and if money is going to go there, so obviously US dollar index is definitely going to do well, and which is what we have seen. The US dollar has done well, and other currencies have declined. Good part for us is that our currency has been relatively stable, so we saw a decline of only about half a percentage, whereas other currencies have declined in the range of 1.5 to 7 odd percent. So that way we are relatively stable. The bond yields also, if you look at, see in US, there was an anticipation that Trump is going to come in, and as a result of that, last 2 months the bond yields, especially the 10 years, has gone up by about 80 odd bips. And compared to that, when you look at our market, our bond yields have gone only up by 10 odd bips. So that way, that part also is quite resilient for us. I think the only challenging part for us, and which is going to remain a challenge, is the liquidity flows. Because I think our sense is that while a lot of factors are still not known, but when you look at the quantum in October, we have FI selling to the tune of about 1.15 lakh crores. In 5 days of us first five sessions of November, we have seen a selling of about 20,000 odd crores. So it's a massive amount of selling which has happened. But good part is that you have seen the mutual funds buying about 1.05 lakh in October and about 12,000 odd crores in the month of November. But our sense is that overall towards the month end, the inflows probably could be slightly better because you have the MSCI weightage of India going up. So India could be getting about $2.5 billion. But having said that, inflows is something which is going to remain a challenge because understand this because of US cutting rates and because of the Trump policies towards pro growth in America. You will see US market doing well. So money is really not going to flow to other emerging markets. So that risk on sentiment probably may not really happen anytime soon. So from that perspective, the inflows is something which is going to remain challenging, and we are already seeing the impact of this in the last 1.5 months. Sectorally, if you look at what we have seen is that financial services has seen the maximum brunt. About in the month of October, they've seen selling of 26,000 odd crores, oil and gas again 21,000 odd crores. So from that perspective, these are the pockets where the weakness is there. The pockets where we don't see weakness is metals and chemicals. So those are slightly better off, and those are already sort of beaten down sector. So do not expect any much of a FI inflow, given the fact that US is going to do well. Now, when you come to sectors, now IT, if you look at what has happened was that last quarter, most of the companies said that let's wait for the US election. That is only when they will be able to guide what is the kind of discretionary spending which is going to come by. So this year was expected to be a mid-single digit kind of a growth. So next year, I think the growth is going to be better because with corporate tax rate cut, it is very much possible that the discretionary spending could get revived. So it could have a positive rub-off on the IT, and we are seeing some bit of it. There could be minor irritant in terms of visa availability, or US saying that do more of offshoring rather than sort of onshoring. But in general, it is positive. I think defense is something which can come back on the table because cooperation on the defense is something which we feel that can sort of go up because see, India requires a lot of technology in terms of aero engines. Then I think you require emails kind of a technology for aircraft carriers. Then you obviously require fifth generation aircraft. So deal for that is still pending because we are looking to sort of come up with a big tender for that. So from that perspective, defense deal is something which could see a big revival. The other sector is pharma, because in pharma, see, with Trump getting re-elected, we expect Biosecure Act to sort of become a legislation. because only Senate approval is pending, and the Republicans have got a majority. So typically, it will sort of shunt out the most of the Chinese players because of the fear that they might pass on that information to their peers. So effectively leaking the IP for the drug which is going to get developed. So it is definitely positive for pharma. And on top of it, it is positive for sectors like, say, auto engineering, textiles, so whichever sectors which have got exposure to US. Because our sense is that the tariff which is going to be hiked for a big country like, say, China is going to be higher compared to us. So there is definitely going to be some tariff arbitrage, which is where I think it could be positive for some of these exporters. So in general, it is positive. Geopolitically, it is very positive. Only thing where it is going to be negative is on the liquidity side.
Right, sir. Acha, another thing on the news that has been was auto sector, wherein the commentary was rather muted and everybody in the festive season. Now that our first set of numbers, I think October or till October we have got. So how does the quarter look like to be going?
I think initially, when you look at the companies came out with numbers, the commentary, like you said, was quite muted. But I think the festive season panned out very well because when you look at the Vahan registrations, you see literally 32% kind of a jump in the overall auto sales. So two-wheeler sales were up 36%, three-wheeler 11%, and you have CV volumes which were 6 odd percent, and PV volumes were again impressive by 32 odd percent. So festive season was definitely good. Now, when you look at October wholesale numbers, I think the two-wheeler continues to sort of do well. Positive surprise was especially on the Eicher Motor front because Eicher Motor, for the first time, clocked more than a lakh unit kind of a volume. In fact, they've been struggling to sort of maintain that 80,000 kind of a run rate. And M&M continues to sort of do very well, especially on the utility vehicle side. I think this is the only company which is delivering a fabulous set of numbers. I think CV was flattish. So from that perspective, nothing much to sort of add. But overall, I think two-wheeler as a segment, the growth is expected to be decent. So there was a fear that probably the growth might taper off, but largely two-wheeler is expected to be sort of intact. And I would not still give up hope because, see, in the second half or in this current period till December, you have a big marriage season. So number of dates are one of the highest what we have seen in the recent times. So our sense is that it is definitely good for discretionary spending, including autos.
Right. Sir, you mentioned M&M has been one of the topics, so one of the healthiest companies. So can we delve a little deeper into what looks so good about it?
So M&M, Vishu, is benefiting from two aspects. One, we are seeing a revival in the tractor demand because on a high base, what the company is saying is that in the second half, the volumes are going to be about 15 odd percent. So that is a really impressive number because see, M&M makes a good amount of margin. Or margin profile is quite good at 17.5% in the tractor segment. And so there was an expectation that the volumes are going to be muted. But because of this better guidance, now this overall for full year, the tractor growth is going to be about 6-7 odd percent. And this is coming on a very high base. The other is on the SUV side, the company continues to do well, whether you look at monthly numbers or whether you look at Diwali or the festive season sales. I think this is one company which is still guiding for mid to high teen kind of a volume growth in the SUV segment. And we feel that it will sustain also because of the fact that the current product profile is doing very well. The kind of launches what they have is also quite impressive. So they are looking to launch 23 new vehicles, about nine SUVs in the ICE side, and about seven in the EV side. And then you have LCV launches. So I think this company is benefiting from both the aspects. So which is why we feel that this is one of the topics or should be one of the topics in the auto as a sector, because you see some pockets struggling for some of the companies, but for this company, both the segments or both the anchor segments are doing very well.
Right, absolutely. Moving on to healthcare, I think the numbers look pretty healthy there as well.
Absolutely. I think healthcare has been coming out with healthy numbers for the past few quarters, and this quarter was no different. DRL is one company which continues to sort of do very well. So they posted about 17% kind of a growth in US, 18% kind of a growth in India. So they continue to sort of do well. And this is one of the few companies which continues to launch complex products on a consistent basis, and that helps it to sort of deliver pretty good growth rate and along with pretty good margins. So this quarter, the margins had some one-off, but overall margin profile is good. Lupin also did very well. They have seen about 11% kind of a growth coming from India, and other geographies also witnessed double-digit kind of a growth, except for the US, where the growth was relatively subdued. But overall, I think this company also sort of continues to do well. And not only these exporters, when you look at hospitals, I think hospitals are also sort of doing very well. While you had some exceptions, like say for example, Shelby, which the performance got impacted because of the rains we saw in the Gujarat. But big players like Apollo came out with pretty good set of numbers. So pharmacy grew by about 18 odd percent. The hospitals grew by about 14 odd percent. And good part is that they are venturing into next big capex cycle for the next 3 to 5 years. And Narayana was also sort of a good or a decent set of numbers because I think India growth rate was 11%. Cayman got impacted, one because of cyclone, and the other aspect being that they are expanding their bed capacity there. So that is why the performance there got impacted. But they are also sort of seeing have initiated significant capex for the next 3 years. So I think this is one sector which continues to do well and continues to sort of do a good amount of capex. So which is why I think growth is here to sustain there.
Right. Absolutely. Let's also talk about defense, which was the darling of investors for quite a while in the recent past. What is it looking out now?
So I think defense again, you have a mixed picture, I would say, because you have companies like Bharat Electronics, so which continues to deliver very steady growth rate of 15 odd percent. And they've said that for FY25, they will grow at 15 odd percent. Now, EBITDA margins H1 was better at 26.5%. They're guiding for about 23-25% kind of a margin. So I think this is one company which is more of a steady performer. But when you look at a company like Mazagon Dock, see the numbers which look very good at 51 odd percent kind of a YY jump. But we need to understand that they are executing frigates and destroyers, so they are seeing maximum revenue recognition. While order book and everything is good, but I think overall sense is that the management guidance is pretty conservative. So management, what they are saying is that I will grow at 10 to 12 odd percent for FY25. And H1 you have first half you have already grown at 28 odd percent, which simply implies that in the second half you are not going to see much of a growth, and so that is where the challenge lies. Now coming specifically to Cochin Shipyard, so numbers were quite okay. I think Cochin Shipyard, there was a period of FY23 and first quarter of FY24 when the company's execution got impacted. But from there on, the numbers have been good. So whatever growth you are seeing is seeing on a sort of a lower base. But here again, when you look at, I think what the company is saying is that overall growth is going to be about 20 odd percent. And they've seen about 29% kind of a growth. So again, you'll see a lower growth in the second half. Otherwise, order book and everything is good. But our sense is that I think with US or Trump coming in, it is very much possible that a lot of defense partnership probably could get revived, or we might see incremental positive news flows. So while we have seen time correction and price correction, our sense is that probably some more time correction can happen. But yes, incremental news flows can change the fortunes of this sector, because this is one sector which is going to remain in vogue for a good period of time. I think we are significantly underinvested in defense.
Awesome. Another sector that I want to talk about is steel, because I think with the Chinese stimulus coming, there have been a lot of headwinds and a lot of discussions. How do we read into all of this?
Yes, absolutely. I think, see, China's stimulus, we need to see and wait it out for, because I think while the stimulus is on expected lines in excess of $1 trillion, but somewhere down the line, I think housing is a far more bigger problem for them, and we still don't know the kind of leverage a lot of state governments are carrying or the players are carrying. But I think from the result or from the commentary of the steel companies, what is coming out clear is that the worst is behind them. So when you look at numbers, see the steel prices were already down 2 to 6,000 rupees per ton. So that way, I think some of the companies like JSW Steel, they maintained their EBITDA per ton. Tata Steel and JSPL saw a marginal decline in their EBITDA per ton. SAIL, in fact, did better with an improvement in the EBITDA per ton. And good part is that most of the companies are saying that or have taken a price hike of 1 to 2,000 rupees per ton. And I think the prices have gone so low that most of the players are now recalibrating. So, which is again our sense is that incrementally things are going to be positive. Now, this China stimulus, whether it can prevent the kind of dumping what China has been doing, again remains to be seen. Because see, China is something where you can't really say with confidence that the growth has revived and all of it. I mean, now there is a fear also that if US does well, and since the money has gone to China in terms of liquidity, and if China is not able to revive, and if US are going to put incremental tariff, you never know. A lot of these flows could again find a way back to India or some other emerging market. So China is always a joker in the pack to sort of say. But I think for metals, the worst is definitely behind us, and which is why I feel that I think incrementally things are going to turn more positive for the sector. Pace of improvement is something which we need to see.
Right, absolutely. And finally, coming to the last section of the day and the most awaited one, which is hidden gem of the week. Which will it be this time?
So I will want to sort of recommend a beaten down stock, which is Engineers India with a target price of 240. Now, a reason why I'm sort of recommending this is that this is one of the few companies which has got or which will capitalize on the large capex pipeline, especially in the refinery and the petrochemical space. And companies also now focusing on new upcoming segments like green energy, hydrogen, or biofuels or coal gasification. Now, if you look at the order inflows have been pretty good in the first half, about 5,000 odd crores. And overall order book is also quite good at 12,800 odd crores. Now, first half, if you look at despite this order book, the overall revenue has seen a degrowth of 19%. And company is maintaining that a revenue guidance of about 3,500 for FY25, which means that the company will be delivering 30% kind of a growth in the second half. So whatever execution they sort of missed is going to be sort of captured in the second half, and which is why I feel that this company, because of that, should do well. And I think overall EBIT margins are better in the consultancy compared to turnkey, but I think valuations are attractive at 17.5 times, and which is why I feel that this stock can go to levels like 240.
Right, absolutely. Well, thank you so much for that. Thank you so much, viewers, for listening to us. We'll be back next week with another wrap. Until then, if you have any questions, please put them down in the comments. Thank you so much, Pankaj sir, for your time.
Thank you.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.